Let's be honest, we all lost money this week. Hey everyone, welcome back to the channel. Last week was a very tough week for all of us, and many people lost a lot of money in the stock market. NASDAQ and S&P 500 had the worst week since March of 2020. So that almost takes you back 2 years. NASDAQ was down 16% from its all-time high and had the worst start of the year since 2008. Now, if you remember, 2008 was the time of the financial crisis. So in today's video, we are going to take a look at the chart, what happened on the both S&P 500 and NASDAQ. We'll take a look at the top losers. We'll touch upon the two companies that were in the headlines for this past week. I will also show you that many people are losing money, so if anybody tells you otherwise, they are probably not telling the truth. So I will show you how much money we lost in the public portfolio in just 1 week. Also, we will cover some tips and techniques if you are starting out investing, and we will end the video with some of these catalysts that are upcoming next week, which will define how 2022 will perform. And I believe the next week is one of the most important weeks for 2022 itself. So without further ado, let's dive in. So here is the technical chart of S&P 500. From the last trading day of Friday, which was January 21st, the index has touched upon the 200-day moving average. If we zoom out to see when was the last time that S&P 500 dipped below its 200-day moving average, it would be all the way around in 2020 around June, and then of course it crashed all the way back in March, which was way below its 100-day, 200-day, 300-day moving average. But 200-day moving average is a very key support level for S&P 500. NASDAQ, we see a similar story but a little bit worse, because right now NASDAQ has breached its 200-day moving average as well, and it is heading towards its 300-day moving average. So it is very important. This is the last line of defense for NASDAQ to bounce back. Otherwise, we are in for some massive pain in the stock market, because the last time NASDAQ went down below its 300-day moving average was also March of 2020. This is going to cause a lot of pain because all the mega cap companies are part of NASDAQ. Even S&P 500 will be dragged down because it is tech heavy. So there are a lot of catalysts that are going to be coming up next week, which is going to define whether we get a bounce back next week or further go into red territory. Now, looking at this top losers chart, as you can see, pretty much all the names, whether it was Google, Amazon, Facebook, Tesla, Nvidia, it was a sea of red all across. Every single company that you either follow or know or have it in your portfolio was in the red territory, and that is the reason why we had such a worst week performance. The two stocks that come into my mind last week was number one, Netflix, which reported its Q4 earnings. They were down 20% and over $100 was shaved off of a stock price. If you have not seen the Netflix earnings recap, check it out. The video will be right over here. The second stock that was in the limelight was Peloton, and the reason the stock dropped over 13% was because the news came out that the company is halting production. The CEO later came out and clarified that they are slowing down the production, and they also laid off a lot of workers was because of the rising cost and low in demand. Earlier I said that everybody is losing money, and so is the public portfolio. So the public portfolio was down over 8%. Since the start of this year, we have lost about 17% from the portfolio, but just in this last week, between 116 and 122, we lost over 8% in the portfolio. SoFi gained about $11 because the news came out that the SoFi's bank charter has been approved. I will do a video later on SoFi, on the bank charter and the upcoming catalyst for SoFi. But going back to our public portfolio, Vale also were one of the gainers in this week. Apart from those two, every other stock or the ETF in our portfolio was down. XLE was down, GGPI, XLF, CHPT, Hood, Ford, you name it, and the entire portfolio was down. So this is the truth, that when the stock market is red, when you have the S&P 500 and NASDAQ touching those key levels of 100-day and 200-day, nobody's portfolio will be safe. Regardless of whether you own index funds or you own individual stocks. Of course, if you hold quality stocks and index funds in your portfolio, you will probably gain from the bounce back once it happens. Now, if you are a new investor or you have just started investing, actually, this is a very good time to continue investing and don't be scared of what is happening in the market, because opportunities like this, they don't come often. What I mean by that is whenever you have such strong pullbacks in the correction territory, this is the time that you actually invest your money in good quality stocks. So I made a stock market crash video sometime back, and then some of the do's and don'ts that is listed in those videos are still holding true. I will go through some of those tips right now, but I would highly recommend that you check out that video. The link will be in the description as well as right over here. Tip number 1 for those who have already started investing: do not panic sell any of your security, even if you're down 50-60% on your investment. Now, the reason why you don't want to panic sell is because nobody can call out a bottom on the market. Nobody can tell you that tomorrow the stock market has bottomed or the next day the stock market is going to rally. So if you divest out of your holdings, the chances are that you will be missing out when that bounce happens. And the bounce can happen any day because of any catalyst out there. Number 2, you automate your investing. What I mean by that is, in these market situations where you are worried about the stock market falling, the best way to manage it is automate your investing to your desired securities, ETFs, or index funds. This way, regardless of how the market moves, you have automated your investing. You will be depositing or investing your money on a certain cadence in certain stocks and ETFs. Number 3 tip: if you have a very risky portfolio where you are investing in penny stocks or hyper growth stocks, this might be a good time to actually step back and see which quality companies that you would want to buy and hold in your portfolio for a long term. And when I say long term, I'm talking about 10 years, 20 years. Tip number 4 is, in case you are not comfortable in investing in individual stocks, I would recommend that you invest in ETFs and index funds. Some examples of index funds are SPY, IVV for the S&P 500. For NASDAQ, you can invest in QQQ. You can also invest in sector ETFs for 2022. There are 3 sectors that are set to gain a lot in 2022. Number 1 is the financial sector. One of the ETFs that you can invest is XLF. I have done a full video on that. Check it out right over here. The second sector is the energy sector, and one of the ETFs that is very popular in that sector is XLE, and I would recommend that you watch that video out as well. Link will be right here and in the description below. So overall, what we are saying is that regardless of how the market performs, if your time horizon is in decades, I would continue to stay vested while looking at your portfolio and making those small changes and tweaks where you start holding good quality companies as well as some of these index funds. Now, if you want to get some ideas on what are some good quality companies, I have 2 videos, so definitely check those out. All is not doom and gloom for the market. Earlier in the video, I said that the week of January 24th is going to be the most prominent and the defining week for the year of 2022. There are some major catalysts that are coming up, which is going to define how the market will perform for the rest of the year. The first catalyst is the major earnings of some of these major ultra cap companies like Apple, Microsoft, Tesla, Boeing, McDonald's, Robinhood. If these companies have a solid report of the last quarter earnings as well as their future guidance is aligned or even beats analyst expectation for the next quarter, we could see a solid bounce of NASDAQ and S&P 500 next week. On the flip side, if the earnings come out weak and the future guidance is weak, we could see further pain in the market. The second catalyst will be the 2-day Federal Reserve meeting, which will dominate the conversation about the end of the quantitative easing and provide some potential clues on the pace of the interest rate hikes in the year of 2022. Based on the clues we get, it will swing the treasury yields and it will impact the stock market. So far, Federal Reserve has been very careful in what the messaging goes out to the public so that they do not impact the stock market. So a lot of these is already priced in the stock market. If there is any surprises that come out from these 2-day meeting, we could see a further downtrend in the stock market. The third catalyst that we will look very closely is the price of Bitcoin and Ethereum. because they both shed over 16% this last week. So that will also be one of the major catalysts that we will have to watch this week if we continue to see this sell-off in the cryptocurrency space. The fourth catalyst is we will have to watch these cryptocurrency mining stocks like Marathon Digital and Riot Blockchain, which also took heavy losses because the Fed is coming up with some stricter monetary policy. So depending upon what kind of news we get around those policy and how it will impact the cryptocurrency space in the coming weeks, we could see further downtrend in those stocks and sectors. The last catalyst that will come around the week's end, which will define the following weeks, will be the Q4 GDP report. Our expectation is the GDP growth will be about 5.8%. As long as the final numbers that come out aligns with the expectation, we could see the market stabilizing. However, if there are any surprises that come out there, the chances are we would see another downtrend the following week. So those are the 5 catalysts that we will be keeping a very close eye on. So for all the earnings that will be coming out next week, from the time of this recording, I will be doing live for some of those quarterly earnings, as well as I will be doing recaps for some of those major cap companies that I mentioned earlier in the video. So if you don't want to miss those recaps, make sure you subscribe to the channel. And if you found any value out of today's content, don't forget to hit the like, click on subscribe and ring the bell notification. I will see you next time, my investor family, but don't forget to invest for tomorrow.